Coming up on Market to Market, the impact of weather is revealed in the government's acre picture. We've assembled a panel of experts to break down those numbers with Naomi Blohm, Darin Newsom, Seifried and Don Roose next.
Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.
This is the Friday, March 29 edition of Market to Market, the weekly journal of rural America.
Hello, I'm Delaney Howell. U.S. trade negotiations went to China this week to meet face-to-face with their counterparts as the two economic superpowers try to find common ground. Widespread flooding still engulfs major portions of Nebraska, Iowa, and Missouri, plus locations along the Mississippi River. These two topics could be enough for a full program of discussion. However, USDA also released their planting intentions and what's left in the bins of American farmers. We are breaking format and have assembled a panel of our regular market analysts. Naomi Blohm, Senior Market Advisor for Stuart Peterson, Don Roose, founder of U.S. Commodities, Darin Newsom, President of Darin Newsom Analysis, Inc., Ted Seifried, Vice President of Zaner Ag Hedge. We'll hear from all of you in just a moment, but first, the numbers. For the week, May wheat shed 8 cents, while the nearby corn contract dropped 22 cents. White House Economic Advisor Larry Kudlow poured a little water on trade optimism with China, and the May soybean contract declined 20 cents. May meal fell $8.50 per ton. May cotton increased $1.03 per hundredweight. Over in the dairy parlor, April Class 3 milk futures added 26 cents. The livestock market rebalanced. June cattle dropped $4.50, May feeders weakened $5.27, and the June lean hog contract plunged $7.13. In the currency markets, the U.S. dollar index increased 20 ticks. May crude oil added $1.30 per barrel. COMEX gold declined $21.70 per ounce, and the Goldman Sachs commodity index stayed steady to finish at $433.80. Welcome back to everyone.
Thank you.
Thanks for having us, Delaney.
All right, folks, I want to get your quick Twitter 1-800 character thoughts on today's prospective planting reports, except for Darin. I'm going to leave you out of that because I think we all know how you feel about that report. Naomi, I'll start with you.
The report today gave the trade a big surprise as far as bigger corn acres, less soybean acres, which was supportive, but overall we're still looking at large stocks, and that's what weighed on the market prices today.
Don?
Yeah, I think when you look at the report, it was a decisively negative report, but hopefully, we've got the worst news dialed in, very similar to what we had in 2016. That's yet to be seen. You've got huge commitments on the negative side. So is this the worst news we're going to see here for the next few months? That's the real question.
With the corn stocks number coming in 270 million bushels above expectations, that means that we have to beat last year's pace of exports and ethanol consumption between now and the end of the marketing year, in a time where we have South American crops looking very good and ethanol really kind of falling apart. It doesn't look likely that that's going to happen. So I think we're looking at a 2 billion bushel carryover for this year, and we could be looking at something bigger than that for next year.
Okay, Darin, I'll let you answer a question now. We also had the quarterly grain stocks reports. I know that that's when you place with a little higher value. What were your overall thoughts about that report?
Well, I'm in agreement with what everybody else said, particularly with Ted's point that what this does is now we can all recalculate what looks to be, what path we're on to reach ending stocks. Corn ending stocks now look to be well over 2 billion. Wheat, we're going to come up, we're going to go over the 1.1. It looks like we should go over the 1.1 billion bushel mark. But the real interesting thing to me was what this said about soybeans and the fact that it didn't react that much today was that we could almost double what USDA is projecting right now from its 900 million based on what we saw in today's reports. If you do the math, looking out over just average demand over the second half of the marketing year, we'd be looking at about 1.6 billion bushels of ending stocks of soybeans. So, again, it was impressive, but why didn't soybeans react?
Were today's market closes, we had closes down in all commodities, livestock included, but in the grains markets, were today's closes just because of the reports today, or is there something else, maybe end of the month, anything like that?
I think you saw in the corn market, once the sell stops got triggered, you saw additional selling happen, which turned into technical selling. We went and touched a big support line to the downside, and that even was breached and taken out again. So with the funds being as short as they are, over 200,000 contracts short, they're going to continue to stay short until they finally get either their technical objective met to the downside, which could be another 10 cents, or until we can get some friendly fundamental news to get them to justify why they should start backing out of their short positions.
I mean, we had a double negative for the corn market today, right? We had quarterly grain stocks coming in way above expectations. I mean, that's a huge miss. 270 million bushels is a huge amount. It really begs the question of where that's coming from.
That was going to be my question too, is how did
we have
trade?
We have a good idea on what exports were. We have a good idea of what ethanol usage was in that time frame. Feed is the one we really don't know, but I don't think we missed feed by 270 million bushels. To me, that smells like residual, which could be suggesting there was more corn than what we were expecting. Maybe the yield last year was a little bit higher. But that's a big miss. And then you put that together with a higher acreage number. I think he had sort of a game-changing event in corn based on the report. It wasn't just a bearish report. It was a change your perspective report. I think we've been seeing things happening in corn that have made some of us worried about the demand side of the corn equation for a little while. And I think today's report was a confirmation of that. And it really makes you wonder about what's going to happen going forward.
Delaney, you bring up a point about, what the market thought of it. Well, the market's been bearish all along. I mean, all we've got to do is look at the May, July spread. We've been running at 74, 75, 76% of calculated full commercial carry. I mean, so the market has been telling us it's bearish. I mean, it's been bearish. It was more bearish than what USDA's recent ending stocks guesses were. So, to Ted's point, we could see this building. We could see that obviously there was some demand problems out there. The market was telling us there was some demand problems out there. Funds were just loading up on the short side. And, Naomi mentioned their technical objective or their non-commercial objective. It could be zero. I mean, we don't know what that might be, but it may not just be 10 cents down. If we're going to be talking about over 2 billion bushels of ending stocks, and as Ted's point is no demand, I think we may have some room to the downside yet.
So, but to your point, though, Darin, I mean, I get the feeling that the funds had an idea that this was all coming. I think a lot of people got caught by surprise by this, by the quarterly grain stocks number. But I don't think the funds did. I think that's the reason they've been selling and been getting as short as they are.
Well, if you look at it, I mean, in the market, you've got big carries in the market. And so it wasn't like a no-brainer. I mean, we haven't been able to earn the carries so far. In fact, actually, it's the other way. Remember, December corn went off the board at 376 3/4. March goes off at 361 1/2, and now you have May sitting here at 356 3/4. So that's the problem, is we have too much grain, the carries are too big, and we haven't been able to earn those carries. And then we've had the demand sink, and then we had a change in the fundamentals with the ending stocks now. I'm sure everybody's going to be doing the balance table like we're talking about, and it's going to be 2.1, 2.2 billion bushels, so we have to shrink it.
Let's build on what Don said earlier about how maybe they put it in the worst case scenario right now. The USDA, a lot of times in this March report, they don't stray too far from whatever they said in February. And so the trade expectations going into this, I think, were overzealous in the standpoint of hoping it would be smaller yields or smaller acres. We're using data that's weeks old already.
Right.
The realistic flooding situation that is in our countryside has not yet been accounted for. So there's a lot that's going to be able to be changing in the coming weeks and in the coming months. So I agree with Don. I think this is the worst case scenario, and that it can only
if you look at it from a timing standpoint, I mean, there's seasonalities and stuff. This is one of the worst times of year to start to turn bearish. Just like I mentioned, 2016, almost the same. On this report, we ended up over 14 cents lower. We missed the acres, And then we started to have too wet in April. Then it turned dry, the second hottest year on record, and boom, we rallied 70 cents from this report. So weather's a great equalizer, and you can't forget that.
And we had a lot of weather questions. Naomi, you opened the gate there for flooding, and I think that this poses the question, not only does this report matter because of the weather issues we've seen in Nebraska, Iowa, South Dakota, etc., but we have a very specific question here that came in on Twitter from Jeff Bergeron. He said, how many acres do not have a chance to be planted as of the flooding, or as of today due to the flooding? And do you think that the prevent plant acres will be bigger than 2011? He also said, yes, I know it's only the end of March, so we're still a little ahead of our time, but what are your thoughts, guys?
Well, you know, it's interesting. Everyone says that prospective plantings are so important, but yet then they come back with the next sentence saying weather's going to change everything. So why is prospective plantings important then?
Darin, it's good to have a baseline of
For
what
what
guys
reason?
are originally thinking.
For what
And so
reason?
then we're going to see what weather does to sort of change that. But
So-
we have a baseline to start from. But look, you know, to I think everybody's point, we could lose 1 million acres in planted acreage of corn from flooding
But we
or
could
from
gain, but we could
snowpack.
gain some acres in soybeans. Everyone says this is
Sure.
the worst case scenario. They must all be talking about corn, because in soybeans we could certainly add acres
Right.
in soybeans, because the northern plains are still trying to get out from underneath the snow. They were thinking they were going to go into more spring wheat,
Right.
and now they're thinking about more maybe canola, more pulse crops, possibly more soybeans.
Sure.
So I mean, what's the worst case scenario? Is it just for corn, or is it for everything? To me, soybeans could get even more bearish, and we don't have any clue what acres are actually going to be.
I think soybeans will get more bearish. But even if you take 1 million acres off the corn planted number, you're still in a position where we're going to, I mean, with demand being the way it is, if it stays that way, we're still in a position where we're going to be $2+ billion carryover for next year.
Well,
What about-
if you look at it on this report of the major grains, we're 4 million acres short, right?
Yep.
And then history
Okay.
tells us 80% of the time in the last 12 years, we've actually gained 1.3 million acres of soybeans, and we've gained about 650,000 acres of corn. So what I'm saying is history tells us we have a chance to add acres. That's all up to the weather, and we're 4 million short on the report. So,
But does this report take into account those bins that are lost? I mean, we saw so many pictures and footage of the grain bins that exploded, grains unsalvageable, etc. Does the report factor that in? Does the market care?
No, it's not factored in. I think the market will care in the short term. It is the adage of it's too soon yet to know for sure, because it is only the end of March. And I don't feel that the market is going to be overly concerned about what is or isn't planted until Mother's Day in May, because we've seen this country get half the crop planted in 2 weeks. And so I think the traders are probably assuming that that can happen. But this year truly may be something a little different, where it's going to drag on and it's going to be delayed, and we are going to see different crops planted in different areas. And there's a lot of fall field work that didn't get done, so those guys don't necessarily have to try to push to get that corn in. They can maybe switch it to a different crop. I think there's a lot up in the air yet, and you have to really be on your toes for what could unfold in the weeks and months ahead.
I'm going to shock everybody and disagree a bit. I think the market has taken into account the burst bins and all these emotional pictures of this disaster in Nebraska and Iowa with the grain floating down rivers and all this. I think the market just factored it in and said, so what?
Well,
We've got 8.6 billion bushels. We had 8.6 billion bushels at the beginning of March. We've got a disaster over this part of the country. We've still got plenty of corn.
So maybe that's something where a localized basis will tell the
That's
story
exactly
for
what
that issue.
that's exactly where it is. It's in localized basis, but the market as a whole has already registered. It's not that it's waiting to see what develops. Right now, it has registered its opinion that we've still got plenty.
well, isn't it? It's probably the estimates are what, around 150 million bushels. So by all told, that's not a big amount.
yeah, I mean, we just found 270 million bushels of corn.
Exactly.
So, and 40 million bushels of soybeans. I can't imagine it's more than that. In fact, the 100 to 150 million bushels is unfathomable to me. Maybe 40? I don't know. Those are some numbers that I just...
Well, something to think about too
Undefined.
is that with that severe winter that we had, I think that the USDA needs to account for more feed that was fed through to the livestock. I know of my clients were telling me that they were feeding 10% more and they were not getting the weight gain. And so in some areas, I think you're going to see the feed demand actually increase for the short term from the harsh winter that we've had, especially in Wisconsin with what we feed to our dairy animals.
Well, like Ted said, you know, it's a head scratcher because realistically they probably understated the crop, or since it was such a slow year and our exports were slow, they were able to account for stuff easily because you think about all the stuff in transit. We've missed that, what year was it? 2010, they missed it by 400 million, and it was because of the transit, you know, so, yeah.
Okay, we've spent a lot of time talking about those reports. I want to move on and let's talk about the wheat markets because they had some export sales news this week. We saw sales to Egypt and I believe Iraq, which was unusual. Is it now our turn to maybe take advantage of Russia and some of those other countries not exporting as much wheat?
Yeah, you know, our dollar is still very strong. That's the problem that wheat has had for the fact that our non-traditional Egypt and Iraq coming in Iraq 2 days in a row coming with tenders. That would suggest to me that the Black Sea area is kind of drying up right now. So that could be really pretty good for wheat for the next couple of months. Now, keep in mind, we've got another crop coming soon, and so do they. But we might have a window of opportunity here for wheat for the next couple of months. I think really of the three grains that we like to talk about, I think wheat might have the most upside potential, but corn might be the anchor.
Darren, you look like you're disagreeing.
It was 5.5 million bushels to Iraq. Okay, that's something, but
It's something.
I mean, it's still wheat. There's still too much of it. We've still got an ending stocks to use projected now of up almost 58%. We're not going to run out of wheat. We're not going to tighten the supply and demand situation. As Ted said, we've got another crop coming. Even if it's not looking good coming out of dormancy, who cares? We've got enough wheat on hand right now. It's not going to take off and run. Yes, to Ted's point, it might be the most bullish, but by being the most bullish, it just might mean it's the least bearish at this point. So, yeah, I mean, we're making some sales. We're not going to displace Russia. We're not going to displace the Black Sea region out of exports. They're the #1 region now. Nobody wants our wheat. They only buy it when they absolutely have to.
Well, and along that line, really, we're only 7% of the world production, so we're not the dominant issue like we are on corn and beans. We're at 33, 34%. But you know, the Russian interior prices have been making new highs, and so that's one of the reasons that the export, they can't get it out of the interior to the export. So we got like you're saying, this little window, Ted, like you said, possibly.
Right.
You know.
Absolutely. Naomi, anything to add to that?
Just that we had been this week the cheapest out there. And again, it goes along to say with what was happening within Russia. So it's an opportunity seasonally. A lot of times you get a little bit of a push higher in the coming weeks and months, but that'll be your opportunity to be making some sales because, to Darren's point, there's a lot of wheat.
There is. Guys, just if you have any other quick, again, 180 character thoughts on the corn and soybean markets, I feel like we covered those pretty well, and I want to move on to livestock because they had some volatile weeks here over the last 2 weeks, really. But does anybody have any other quick thoughts on the corn or soybean markets?
I mean, I feel like I'm beating a dead horse here, but ethanol is a problem for corn, right? And it really comes down to what the EPA is doing with the RFS and granting more than 400% more than what we were doing 3 years ago, these SREs, the small refiner exemptions. We're basically handicapping or cutting the RFS dramatically, and it's destroying RIN values, it's destroying ethanol prices, it's destroying ethanol profit margins, which means we're not as motivated to use corn to make ethanol, and it's a big problem. And it's a shame because ethanol has been the bright spot of a corn balance sheet for so long now, since 2010. And with this current EPA, that's really falling apart in front of our faces. And it's really a shame. If nothing's done about that, we're going to have a major problem with corn going forward.
Was that part of the reason that you stated earlier that you think corn is a game changer now?
Well, this has been happening since last October. Most people haven't really been seeing that. It's been kind of flying under the radar. And I think because a lot of people don't really understand what SREs are and how that works and how RINs work and so on and so forth. But, you know, look at what's happening with our corn demand for ethanol. Each week we're falling well short of the USDA's target that we need to hit their current estimate. And again, ethanol profit margins are under a tremendous amount of pressure. Again, this is a problem. It's something that we need to learn more about, we need to understand, and we need to start yelling at the EPA to say, hey, live up to your promises of the RFS, and to the Trump administration, live up to your promises of, keeping the RFS good. We need the E15, although that won't fix it by itself. We need more exports of ethanol, so a trade deal with China could help, but that won't fix it by itself. We need to fix the RFS.
Don,
Yeah, that's it. I was just going to say, along with Ted, is that really you're banking a bit on a lot of these commodities on China and ethanol demand. But I guess I would say it's the time of the year to keep your eye on the sky.
Okay, let's talk livestock. I want to first address, of course, the flooding that may or may not have an impact in the cattle markets. Again, I'm going to ask, is that being factored in right now? Have we already factored it in? Are we going to factor that in?
I think you see that come in for fourth quarter. There's a lot of different opinions about what the death loss has been. One article stated potentially 1 million.
I saw you shared that today.
1 million calves lost. But there's not a for sure number out there. What the market is mostly focused, though, on right now is the reality that there's plenty of production, there's plenty of supply. We've got second quarter production expected to be higher, 420 million pounds higher. And so there's not an issue of product right now for the short term. Coming down the road, that might be something different with the death loss that's there. But I'm curious to see is if the box beef values can hang in there and if the choice product is going to be there or not. Because some are thinking that with the winter that we've had, that the choice product is not going to be there. So maybe we see that marketplace stay higher and keep cattle supportive. Bottom line, cattle continue to be in an uptrend. We could even drop another $2 or $3 and still be in a long-term uptrend. But it's the deferred contracts that I'm very curious in the months ahead once we get a better handle on what actually has happened because of the flooding and the loss.
The feeder cattle market has reflected that pretty well.
Yeah.
But seasonally, we tend to have a bit of a
pullback.
A pullback,
Yep.
and that's because demand softens a bit between now and full-on grilling season. I think the strength in the hogs and the weather has kept cattle up a little bit longer than maybe it should, but we've already started to see cash slide a little bit. I think we're due for a bit more of a correction in cattle. Longer term, I'm still really bullish for protein in the United States because I think we're going to be competing with China for our own product. But yeah, I think now is the time for a bit more of a pullback there for the cattle.
Don, I'm going to turn to you. For African swine fever specifically, have we priced that out of the hog markets? We had, I think, $2.30 in the deferred today on Friday close. We done there?
I tell you, the hog market's a very interesting one because everybody's trying to compare it to the PED virus, which is true. That was a domestic issue. This is an export issue, and I think people forget that China has to buy the pork first. And I'm not so sure. I mean, when you get into these places, I mean, the refrigeration capacity, I mean, how are you going to get to some of these rural areas on a motorcycle with a freezer? I mean, it's tough. It's a logistic issue, and I would say that you'd be you got to be very careful with that. The trade basically has been wrong the whole time. They factored in a big rally, got caught because they found out there was liquidation. Then, they got pounded because the liquidation hit the market. Now everybody's fired back up because China's going to buy. They bought 2 weeks in a row. This last week, they shot us up. This last week, they bought nothing and it pounded us down. You're at the government saying 50 to 56 on the fourth quarter, and we're up around, 81 here on October hog. So I'd be careful.
Anybody have any other different thoughts, similar thoughts on that?
I'd be curious to see how the exports are going forward. I'm sure that I'm wondering if the Chinese will find a different type of a substitute for pork because I've
Poultry
learned
and
my
swine.
lesson thinking, oh, they don't need soybeans, or they'll always need to buy soybeans. So I've learned that lesson. So I'm like, okay, what's the substitute? Is it, like you said, poultry? Is it going to be going into rice? Is it going to be seafood? So I'm not overly excited about the Chinese and their hope that they're going to continue to buy pork from us. I think that they'll buy what they need, but it's not going to be our saving grace to get through this. There's still ample hogs out there. We saw that on the Hogs and Pigs report. Everything 102% on the whole shebang, and there's plenty of hog out there, plenty of product.
Yeah, I mean, if you look at it, 9 years of expansion on the breeding herd.
Right.
I mean, and you're back to all these numbers, largest herd, since 1980, 81 on a lot of these numbers. So,
But it could have all been leading to this, right? I mean, look, your assessment of what has happened in the hog market is dead on. I mean, everybody got excited about ASF and thought it should go sky high. But what they didn't realize is that 40% of the producers in China are smaller mom and pop shops, and they run to market when something like that happens because they don't want to contract ASF and they don't want to lose their herd. And so there's that liquidation. So that caught the market on the wrong side. But now, China's buying despite a 60% tariff. That shows real need. Now, is it going to be every week? Maybe not. I mean, we saw that this week. The potential for China to buy all of the hogs is certainly there.
Oh, yeah.
We'll see, right? But I don't know. I think we were due for a pullback. We had gotten really very overbought. We're seeing that here at the end of this week. It could be a little bit further, but I'm still fairly friendly hogs.
Yeah, but from a risk management standpoint, which is what I think we're talking about, you've got to be very, very careful, because if you get African swine fever here, you're in big trouble. So what do you do? Do you forward contract? Do you sell? Do you not sell? Do you buy puts?
I'm going to stop you there. Hold that thought. Naomi Blohm, Don Roose, Ted Seifried, and Darin Newsom, we will continue this discussion. Thank you all so much.
Thank you.
Thanks, Elaine.
That wraps up the broadcast portion, but this conversation is going to continue on Market Plus, where we'll continue to answer more of your questions. You can find it on our website at markettomarket.org. Discussions like today are very academic. Visit markettomarket.org/classroom for 5 different modules aimed at those in school now or continuing their education. Join us again next week as we look at college efforts to attract underrepresented youth. So until then, thanks for watching. Have a great week.
Market to Market is a production of Iowa Public Television, which is solely responsible for its content. Pioneer Hybrid International is a proud sponsor of Market to Market. Tomorrow. For over 100 years, we've worked to help our customers be ready for tomorrow. Trust in tomorrow. Information is available from a Grinnell Mutual agent today.
AccuSteel, offering fabric-covered buildings specifically designed for the cattle industry since 2001. The next generation of cattle buildings. Information at accusteel.com.